Hi, everyone, and welcome. Thank you for joining us for today's Meet the Analyst webinar, Advertising Trends to Watch for 2024. I'm your host, Marissa Kozlov, Vice President at Insider Intelligence, and I'm joined by my colleague, Vice President of Content, Paul Verna. Paul, so nice to see you.
Likewise, great to be here. Thanks for having me.
Very happy to have you here. And I am so looking forward to all that you have in store for us today on what's ahead for advertising in 2024. So before we get into all of that, I'd just like to thank Attain for making today's webinar possible and give a big welcome to Attain's CEO and co-founder, Brian Mandelbaum. Brian, great to have you with us.
Thanks for having me. Good to see everybody.
Yeah, good to see you. Looking forward to all that's ahead. So just a few notes for our audience before we dive in. You are going to see a ton of great information today. So a link to the slides and the recording will be emailed to you after. We'd also love for you to engage with us in the chat throughout the show to hear your thoughts and predictions for 2024, and also any questions you may have. So just use the chat window on the right side of your screen to submit questions or comments at any time during the presentation, and we will get to as many as we can during the live Q&A later on. So with that, Paul, what's on your agenda for today?
Well, funny you should ask, Marissa. There is no agenda for today. Well, actually, there is an agenda slide that you're all going to get when we send you the deck afterwards, but I don't want to show it now because this is a special kind of webinar where we like to build a little suspense as we go through the trends. But I'll tell you this. I'm going to be going through 8 trends, so I'll start each one by stating the trend, then getting into some of the data points that support it, and then sharing one or more predictions on each one. I also want to mention that even though I'm the one who gets to bask in the spotlight with Marissa and Brian today, the report on which this webinar is based was a group effort with the senior analysts on the advertising and media team, who are Ross Benish, Evelyn Mitchell-Wolfe, and Max Willens. All right, so without further ado, and without a drum roll because our sound effects team is taking an early holiday, trend number 1 is digital ad spending is going through a period of modest growth. The kind of year-to-year growth we saw over the past several years is giving way to more moderate increases, and that's not a sign of an unhealthy market by any stretch, but really just an indication of how mature digital ad spending is now that it's more than 3/4 of total media spending. Here's what it looks like. So this is a chart of US digital ad spending from 2013 through 2027, and we've adjusted all the past dollar figures to 2023 equivalents, and we've projected a 2.45% inflation rate from 2024 through 2027. Now, you'll notice the big bump in 2021 following the COVID outbreak, but also take a look at the compound annual growth rate. Those calculations are at the bottom. So from 2013 to just before the onset of the pandemic, digital ad spending saw a CAGR of 19%. That dropped to about 13.5% from 2019 through this year. And it's going down to about 9%, below 10% for the remainder of the forecast period from 2024 through 2027. So here's our prediction for this trend. After 2024, we're not likely to see big swings in digital ad spending. By that, I mean that the big spikes that we saw around the pandemic and even earlier during the Great Recession, which I didn't show in the slide, but those fluctuations resulted from unforeseen events. We're going to continue to have unforeseen events. I'm sure they're going to happen again and catch everyone off guard. But given the maturity of digital ad spending, what we expect to see from here on in is slow but steady growth with fewer ups and downs than we saw when the market was still developing. Okay. So now on to our second trend, and that is that the cookie is down to its last crumbs, and this time we're not really kidding. So Google has said they're going to fully phase out third-party cookies in Chrome in late 2024, which raises the question of how ready the industry is for this milestone. And I have to say that the data suggests that we're far from ready. So about a year ago, cookie inventory, is about as of Q3 of this year, cookied inventory still makes up the vast majority of programmatic activity in the US, according to this data point from 33 across. And in all of the 10 industries they tracked in Q3, the percentages of cookied inventory range from around 3/4 to almost 90%. And those numbers actually went up quite a bit over Q2, which is really not the direction that they should be going in. Now, this isn't the only study that shows a lack of readiness. So more than a quarter of marketing professionals worldwide have not yet adopted an ID solution to address cookieless traffic. And also about a quarter of US marketers and agencies are still using cookies, and about 40% of advertisers are unfamiliar or only moderately familiar with targeting methods that don't use cookies or mobile IDs. So these three studies are courtesy of ID5, Advertiser Perceptions, and IDC and Augury, respectively.
Paul, let me ask you a question about this one.
Yeah.
We have been hearing about cookies going away for a while. Is this really going to happen in 2024?
Well, I mean, I guess I've shared enough predictions that I don't mind doing one off the cuff here. And I'm going to say that there's going to be some kind of delay or qualification, let's say, in Google's timeline. I think, they've been very vague about this, but they sort of signaled like a late 2024 phase out for Chrome cookies. And I will not be shocked if something happens to throw that off track a little bit. So with that, the official predictions in this area. So first is that Apple will roll out a DSP in the next year or so. The company has been advertising high-level DSP positions for over a year, so it really just seems a matter of time before this happens. So a DSP would deliver on Apple's ambitions to build out its ad business, and it really would also confirm some of the suspicions people have that the whole ATT reset back in 2021 was probably motivated not just by Apple's sensitivity to privacy, but also by wanting to tilt the playing field in its favor as it goes up against other huge ad businesses now like Google, Meta, and Amazon. The second prediction is that the absence of cookies will finally force some consolidation among identity providers. Now, there are more and more of these ID services battling for market share at this time of transition. And a lot of people, myself included, think that there are going to be some mergers, some acquisitions, and just a general shakeout among some of the smaller players. Now, one person who agrees with that viewpoint is Amit Shah from Prohaska Consulting, who I spoke with for an ID resolution report recently, and he told me, quote, "We're expecting that the long-anticipated consolidation will happen inevitably. Deprecating third-party cookies will break some of these companies' models, and they will no longer be able to achieve scale." That's end of quote. Okay, so the next prediction is that, the next trend is that AI is coming to pretty much everything. Now, unless you've been living under a rock, you've pretty much heard that, AI has been one of the biggest buzzwords over the last year, but it's more than just a buzzword. Most marketers think that AI will transform the ad industry very quickly. In fact, 18% of them think it already has. But within the next 2 years, most marketers think that the impacts will be even more widespread. Now, some of the things that are already happening and will scale up are companies using generative AI and large language models behind the scenes for things like planning, targeting, and optimization, and also in some of their outward-facing services. To dig a little bit deeper into this, Gen AI is starting to power identity resolution and ID-free targeting. So some experts are talking about using machine learning and LLMs to essentially recognize customers based on things like their cadence and their word choice. And related to this is the idea of using Gen AI for ID-free targeting. So in some ways, this is a throwback to contextual, where you're more focused on targeting groups of people based on context, rather than just trying to pinpoint individuals based on identity signals. But what Gen AI can do and is doing is essentially supercharge that process so that you can achieve a more refined level of targeting than through what I would say would be old school contextual. And for our predictions, we have 3 around AI. First is that marketers and agencies are going to lean more and more into Gen AI for things like creative ideation and execution, for media planning, and for everything else I mentioned earlier. This is a fast-moving train that pretty much everyone is jumping on board right now. Second prediction is that Gen AI is going to make an even bigger mark on search than it has so far. I think we're going to see more and more generative AI search and Gen AI algorithms applied to things like social search, which was already disrupting the search market before this wave of AI came along. And third, whatever that post-cookie world looks like and whenever it happens, you can be sure that AI is going to play a central role. All right, let's go to trend number 4. And that is that Nielsen is going to sunset its legacy TV currency eventually. And I say eventually because they'd said this was going to happen in 2024, and then they pushed back that timeline, a la Google. So we don't exactly know when, but the writing is on the wall, and at some point soon, we're going to see a shift that will mark it before and after in TV ad measurement. Those C3 and C7 ratings that have defined ad measurement for the better part of a generation, they really don't reflect anymore how people watch TV or connected TV. And the tectonic shifts that we've already seen as the world shifts from linear TV to CTV have rendered this panel-based methodology obsolete. So the result has been a bunch of measurement and analytics firms rushing in to fill the void. And a handful of these are getting a lot of traction from TV networks and from streaming services. In fact, only about 13% of TV and video ad buyers want a single currency at this point. And remember that the Nielsen era was all about a single currency that most people felt was imperfect, but it was the devil they knew, and it worked well enough as long as everybody agreed on it, which they did. Now, most buyers prefer at least 3 currencies, which that's really the world we're inhabiting right now during this transition period. Now, this survey was fielded before Nielsen made this latest about face, but the message is pretty clear. We're at the dawn of a new post-Nielsen era. So our predictions here for Nielsen. So first, Nielsen will lose its iron grip on TV ad measurement. I think that's pretty obvious from the data and the insights that I just shared. But paradoxically, Nielsen will continue to be a key player in a multi-currency world. And that's because Nielsen has its own digital currency that's separate from its legacy panel. And it also has deep infrastructure, deep expertise, and a lot of relationships with media companies. So I expect Nielsen to stick around for a pretty long time. Okay, so that brings us to halftime, but there is no time for a break. We have lots more trends to cover. So here's the next one, number 5. And that is that the cable bundle, as we know it, is as good as dead. Yes, there are still millions of people subscribed to cable, satellite, and telco pay TV services, but they've really become a minority at this point. Their numbers are dwindling, and they make up an increasingly older demographic. So none of this bodes well for the future of traditional pay TV as we've known it. So here's what this looks like in our trademark black and red charts. The red line here represents non-pay TV viewers. So that is the sum of cord cutters and cord nevers. The black line is traditional pay TV viewers. So not only is the trend line unmistakable, but 2023 actually marks an important tipping point where those non-pay TV viewers will surpass pay TV viewers. So the lines are crossing, In fact, it's already happened. And those lines are just going to continue to move in opposite directions. There are lots of factors that are driving this, but one of them is these carriage disputes between networks and pay TV services. These have been going on for a very long time. They flared up this year, and we're certainly going to see more of them in the future, including with digital pay TV services. The big one in 2023 was about Disney and Charter or Spectrum, and it really brought out the difficulties in monetizing viewership on both traditional and digital. But, regardless of how those challenges play out, we know that the eyeballs and the dollars are just going to keep going over to digital. Okay, so predictions here. So one is that as more people make that shift to CTV, they will be demanding more and more cohesiveness and more affordability from providers. So that means better and more user-friendly ways to navigate all of that fragmentation with content spread out among a lot of different services. So that could mean more bundling, which we're actually starting to see. But there's also a monetary side to this here, with streaming services pretty much having all raised their prices across the board. That's putting a strain on people's wallets, so something is going to have to give. And our second prediction is about sports, where we're definitely going to expect more and more leagues, more sporting events to get picked up by streaming services. And on that point, here's a super quick rundown of key events in sports streaming over the past year. So starting with YouTube TV, picking up NFL Sunday Ticket from DirecTV. You have Thursday Night Football going exclusively to Amazon in 2022. That's part of a multi-year agreement. You have Apple paying for what seemed like a bloated price for Major League Soccer rights until a certain Lionel Messi joined the league, and that included a novel profit-sharing agreement with Apple and with Adidas. Then we have Disney pivoting ESPN from a cable network to a D2C service, and Warner Brothers Discovery taking the unusual step of offering sports content for free on a limited basis. So there's going to be a lot more where this came from as more contract renewals come up. So if you're a sports fan, you have been warned. So with that, we move on to trend number 6. And that is that we have seen the future of streaming media, and it's ad-supported. That's not to say that subscription monetization is out. In fact, quite the opposite. But it means that the gravitational shift is going more toward ad-supported platforms at this time. And here's what it looks like again in black and red, but now with lots of logos. So this is our breakdown of CTV ad monetization by major US streaming services. In 2023, 4 services will make more than $1 billion in just CTV ad revenue. Now, again, this doesn't preclude subscription revenue. And in fact, some of these platforms like Hulu, Roku, and Disney Plus and Netflix, they still make the bulk of their revenue from subscriber fees. So there's that billion-dollar threshold, which Hulu, YouTube, Roku, and Amazon have crossed this year. And by next year, 3 more services will join that billion-dollar club, and they are Peacock, Pluto, and Tubi. And also take a look at something else that's going to happen next year. Amazon is going to leapfrog Roku to take that number 3 spot. And this is because next year is when Amazon rolls out its ad tier on Prime Video. So that will not only turbocharge Amazon's CTV business, but it's also going to have an impact across the market, as I'll get into in a minute.
Paul, let's take a step back and look at that slide again.
Yes.
You have a really nice mix of logos there that show both ad-supported and subscription services. You mentioned at the top of this trend that the shift is going to be more towards ad-supported services. And with so many choices, how big will that shift be in 2024?
I think it's going to be pretty big because, I talked about some of the big services like, what Amazon is doing, but you also look at Pluto and Tubi, which are fast services, free ad-supported streaming TV. So they are growing quite a bit as well. The Roku channel, even though Amazon is going to vault over it, you could still see Roku alone is going to grow quite a bit next year. So really, we're just seeing a lot of activity going over toward this ad-supported side. And that's partly because of the price increases I mentioned earlier. As platforms raise their prices for subscriptions, the ad tiers tend to be cheaper. So people who feel like their wallets are being stretched are more likely to buy into those plans. And I'll show a couple of data points that bear that out in a minute.
Great points. Thank you.
So yeah, so on those predictions, so first, streaming ad prices will continue to coalesce. And trend number 2 is that 1/3 of streaming subscriptions are going to become ad supported, to the point I made earlier. And I'm actually going to follow up these predictions with some data points. So on the first one, the gap in CPMs among major streaming services is starting to close up a little bit. So Disney and Netflix launched their ad tiers about a year ago with some very aggressive pricing, but they both since regressed more toward the mean. And actually, from some data that's come through after we locked in this forecast in September, both of those companies may have further lowered their ad rates for Q4. The other interesting thing is that Amazon seems to be coming in the mid-30s for its upcoming ad tier, which is going to roll out early next year. So that will make for a tighter market with somewhat more uniform pricing. Now, on the prediction about ad-supported tiers, so here's a side-by-side view of 2 charts from Antenna. So on the left, it shows that about 1/3 of new SVOD signups were on ad-supported tiers in 2022. So it's easy to project how that number is just going to go past 1/3 this year and probably keep going up. And on the chart on the right, that shows how these signups break down by platform. So Peacock and Hulu have had most of their new signups on their ad tiers this year. But even at the other end of the spectrum, it's pretty remarkable that almost 1 in 5 new Netflix customers are on the ad tier. I mean, this is the company that swore off advertising for so many years, and now they're finally on board. And also, when we talk about 18% of Netflix signups, that's a big number to begin with. So that's a lot. All right, so that brings us to trend number 7, which I sort of teased with the last 2, and that is that Amazon will push CTV ad spending to a new milestone as linear TV ad spending continues to slide. And here again, we have some side-by-side charts. This time they're based on our forecast. So on the left is Amazon US CTV ad revenues with that huge spike in 2024. And by 2025, it's going to almost triple this year's number. On the right is overall CTV ad spending, again, with an extra big spike in 2024, driven mostly by Amazon. And by the way, in case you can't make out the years in these charts, they actually show different timescales, but the trend is pretty clear. So our prediction here for trend number 7 is that Apple will become the next and last of the major streaming services to launch an ad-supported tier this year. That goes along with the Apple DSP prediction I made earlier. All right, so with that, it is time for the last of our 8 trends. And that is that smaller walled gardens will cross-pollinate with bigger ones. So walled gardens make up a big share of programmatic display ad spending in the US, but that share is going to fall a little bit. It's going to fall for the first time in 2023 and kind of trickle downward. One of the drivers behind this is that retail media spending is taking up more and more budgets. It's growing. So that's causing some of these smaller walled gardens to try to prop up their ad businesses by joining up with their bigger counterparts. This happened a few times in 2023 with Twitter or X using Google Ad Manager to extend its reach, and then with Pinterest and Snapchat both cutting deals with Amazon again, to boost their ad businesses. And regarding our final prediction here for this trend, we think that Reddit will follow in its competitors' footsteps by lining up with a bigger walled garden next year. So with that, back over to you, Marissa.
That was great. Thank you so much, Paul. It seems we have so much to look forward to in 2024, and we will get back into it shortly with a special quick take conversation between Paul and our guest, Brian Mandelbaum, CEO and co-founder at Attain. And don't worry if you joined us late. We'll email you a link to the slides and recording of today's presentation after the show. And just another reminder to share your thoughts on trends and predictions for 2024 in the chat. And if you have any questions, we have our live Q&A coming up, so please keep those questions coming. All right, Paul, back over to you and Brian.
All right, let me just jump right in with this question. So given that Google has pushed out its own timeline twice already, the programmatic industry is understandably skeptical that third-party cookies will be completely phased out by the end of 2024. So what's your advice to buyers that are navigating this uncertainty right now?
I think I like to look at it in a couple of key themes. First theme is all about embracing the uncertainty. I think that what everybody knows about digital advertising is that it's evolving pretty rapidly, and uncertainty is actually the only thing that is constant. So if they can be prepared to be adaptable and agile to whatever your strategy is, just be on the balls of your feet, which might mean that they need to diversify their current data or their data relationships. So like relying on third-party cookies, I think is risky going into 2024, especially with Google's stance and what we don't know. But investing in building a first-party data strategy, or more importantly, working with partners that have first-party data that ultimately leads to consent from the consumer perspective, I think is a way to remain dominant. And then with that, you should prepare for like a hybrid future. So third-party cookies may not go away in its entirely in 2024, but their importance will diminish. So be ready for this hybrid model whenever it happens. And that means you have to invest in technology. So exploring advanced technologies like AI-driven solutions, which improve your audiences and targeting and personalization in a post-cookie world, I think would be super important. And then I guess with all that being said and sort of tie it all together, it's like test and learn. So run experiments, A/B tests, understand what the impact of the cookie deprecation will be to your business and your strategies going forward.
So prepare for the unexpected, but prepare nonetheless. So you mentioned AI just now. I talked about AI earlier. In what realms of advertising do you think that AI is having the most immediate and significant impact?
I think it's having impact in a lot of areas. First and foremost, we've seen a little bit of this in the industry already, is around enhancing the optimization that is in the advertising ecosystem, because its ability of AI to like process vast amounts of data in real time allows advertising to be far more efficient, I think way more effective, especially in programmatic ad buying. But these algorithms can be even customized and capitalize on things like real-time sales impact and adjust for placements, content, and bidding strategies within milliseconds. So I think that's super important. And that means that AI could probably deliver a personalized experience for audience targeting. So being able to look at segmentation and personalizations that transform the experience for the consumer based on where they're consuming that content, I think will be critical. And I think what the most important thing around AI is this transition from scale, like deterministic scale, to which third-party cookies lack accuracy, to sort of smaller, more refined data sets that have tremendous amount of accuracy that AI can now complement and scale up in a great model. And the way that those models are being supported is its prediction of capabilities, and ultimately, can it actually predict sales attribution and impact in this complex world? I think that's where AI becomes super dominant as we go forward.
What factors do you think are responsible for that year-over-year decline in the walled garden share of ad spend? And does this spell trouble for retail media networks?
I think to your points earlier, it actually spells tailwinds to retail media networks. I think we're going to see a shift in advertisers' mindset to move towards things that are ultimately attributable. You talked about currencies earlier and how there will be not just one currency like Nielsen, there'll be a host of currencies that marketers and advertisers will be sort of anchoring on as what is going to be the ultimate way they're going to buy and sell marketing and advertising space. So I think that retail media is a huge boon for the industry. And I think that what it delivers to the market is this ability to understand the actual, what is performative, what actually rings the register, because marketers are doing one thing, which is trying to sell more stuff and ring the register more efficiently every single time. And retail media, I think, is going to reduce the needs of those walled gardens, but it might be its own walled garden in the future.
Yeah, I mean, to your point, our forecasts for retail media just keep going up and to the right. When we revise them, we almost always go up, and it's it's a juggernaut for sure.
It's what the definition of retail media will be in 2 years from now. That would be interesting, Paul.
Yeah. It's also interesting, the point you bring up about walled gardens, because I mean, there are those who feel that a lot of retail media networks, especially the 800-pound gorilla, is a walled garden in and of itself. But that's maybe a subject for a whole other webinar someday. That brings us to the last question before we go to live Q&A, Brian. And this is sort of like an anti-trend question. So as we approach the new year, what is a current hot topic in the industry that you think will no longer be the subject of discussion in 2024?
Well, I guess I'll put it in context with what we won't be really talking about and what we might be talking about. I think that we won't be talking about cookies anymore. I think we'll be talking about a transition to alternative solutions like first-party data, contextual advertising. We will definitely be talking about Google's private sandboxes and what that's happened in 2024. I think that we won't be talking about privacy regulations and user preference. It'll just be sort of part of the bedrock of what we do as an advertising ecosystem. We'll be super attuned to things like GDPR, CPRA, and all the other states that have privacy-minded regulation inside of their appropriate houses. And users will be becoming more and more conscious of these efforts to protect privacy. I think we'll talk about how we've been adapting. Right now, how we've adapted instead of like how we're going to be adapting. And then I think that we won't be talking about AI development anymore. We'll be talking about like the success that AI and AI models have been and been performative in 2024, which I think will be a testament to the speed in which this industry has been able to adapt and embrace new technologies. We're one of the few industries out there that is always forward thinking and forward leaning. And then I think measurement will be something that we don't talk about the way we used to this year, that we will talk next year. We will probably be shifting to your point around currency and what I mentioned earlier. I think that there will just be new ways that we'll be measuring what is considered efficient or effective going forward. I'm super excited about all these transitions that are happening.
Yeah, it certainly feels like a sea change year in many ways, 2024. And just to pick up on a couple of those points, Brian. So about privacy, we did a webinar last week on ID resolution and shared some consumer sentiment surveys around privacy. And yes, there's a much greater awareness and sensitivity to it. And and I think as far as measurement is concerned, I mean, obviously there's the Nielsen changeover, there's the cookies going away, all of which greatly impacts measurement. But there's also a lot of debate around retail media, standardization of measurements. So I think we're going to, ad measurement is always one of the biggest topics that we see with our clients, and we fully expect that to be the case next year.
Yeah, if there's a transition from one walled garden to the next walled garden, how do you measure between the both of them? To your point.
Exactly. Yeah. Well, those are great insights, Brian. So thank you again. And now I will hand it back over to our hostess with the mostest. That is Marissa Kozlov. Sorry, I tripped up over those words there a little bit, but we know what we're talking about here. Marissa.
Well, thank you again
Back
for that
over to you.
introduction, Paul, and what a nice compliment, the hostess with the mostest. So thank you to you both, Paul and Brian. That was a really interesting discussion. It was really helpful to hear your take on certain topics like cookie depreciation, and especially, Brian, your thoughts on that we may not be talking about it much in 2024. And also your takes on AI, walled gardens, retail media. Really great discussion. But as promised, let's get to the Q&A. So I want to thank our audience. It's been great to see you all engage with us during the time together thus far. Paul, the first question is, which advertising mediums or formats will shine in terms of audience trust in the coming year?
Audience trust?
Mm-hmm. Yes,
I
audience
think,
trust.
I mean, trust is a tricky word, because I think there's a general sense that with the kind of year that's coming up, with political ad spending, with so much disinformation flying around, particularly social media, that trust has eroded in a lot of platforms. And also in many of these platforms, advertising is sort of native to the feeds and the platform. So trust in the platform itself carries over to trust in advertising. So I mean, I think it's safe to say that political ad spending is going to be in the spotlight, and that a lot of questions are going to come up about the trustworthiness of information and of ads on those platforms. There's also a growing issue around CTV and potential fraud on CTV, which, because CTV is ramping up so much, fraud usually follows dollars and eyeballs. So those are areas I think we will need to look out for, and really keep tabs on consumer sentiment around trust.
Well, it's interesting because you brought up the election for next year a few different times, and political ad spending. We know next year is an election year, which often equates to a boost in ad spending. So what are you seeing for ad spending for next year? And also, how does the Olympics also tie in 2024 to ad spending?
Yeah, I mean, I talked mostly about CTV ad spending, and I attributed a lot of that to Amazon, which is certainly the case. But underlying all of that is that every presidential election year, and even the the years in between the midterm elections, they tend to bring up a spike in ad spending. We're even going to see that with traditional TV, which is on kind of like a downward spiral. But next year, there's going to be a slight little bump in TV. So yeah, I mean, political ad spending next year, we're expecting it to be 10 billion for the first time. That's a lot of spending, and more of it is going to digital. So, and the Olympics only add to that pile-on effect. There are going to be other big sporting events happening next year, like the Euro soccer tournament in Europe. So yeah, all of those things generally bring an expected bump in ad spending, and next year will be no exception.
All right, thank you. I think you both will have a really interesting take on this next question. Brian, I'll actually put it to you first, because you did just speak recently to cookie depreciation maybe not being as big of a topic next year. How will cookie depreciation impact digital ad spending, in particular from an incremental ROI standpoint?
When it comes to measurement perspective, I think is where the question comes from, the genesis of it. I think that cookie deprecation will be a disruptive point of view when it comes to how do advertisers effectively measure return on investment, and most importantly, incrementality of that return on investment. I think that marketers are now starting to come attuned to the fact that even whether you're in a walled garden or not, cookie or not, it's not just about did the investment drive a return on investment, but did it actually drive incrementality of selling more than it should have, or an outsized return based on the investments that are been made before. And I think that with the deprecation of the cookie, that there'll be a reliance on other partners to help you sort of decipher whether that incrementality of an ROI truly exists.
Yeah.
Paul, any thoughts on that one?
Well, I think the key word that Brian hit on is incrementality. So it's about driving additional business. It's about trying to get to that holy grail of attribution. And it is about triangulating some of these measurements and inputs without the benefit of the third-party cookies. So yes, that means relying on more partners. It means leaning into that first-party data to try to gauge how it's helping you realize, your goals when it comes to investments in advertising.
Okay, thank you. Paul, our next viewer has a question about shoppable ads specifically. What's your perspective on the convergence of retail media networks and CTV with bottom of the funnel shoppable ads? Any sense of its impact on CPMs and adoption?
I think that's going to happen relatively slowly, at least in the US. I mean, things like, shoppable ads and, shoppable streaming video. That's something that is huge in other markets, particularly in Asia. We're going to see more and more of it. I mean, TikTok Shop is definitely gathering steam, and every other social platform is trying to lean into its commerce businesses. But I think there are also some pain points there. So I think we're going to see more and more movement on that front. One thing I will mention is that when we look at a platform like TikTok, so whether it's their e-commerce business or their search business or their attempted pivot now to longer form video, those are all initiatives that are driven mainly by the demographic skew toward Gen Z and millennials on TikTok and on other social platforms. So I think that those younger users are going to drive some of that shift. It's going to be gradual, but eventually I think we are going to see more and more shoppable media on those platforms.
Okay, so following that, you bring up TikTok. Over the past year, we've seen YouTube gain considerable revenue share in programmatic ad-supported CTV. Do you see TikTok gaining similar momentum as it introduces CTV inventory?
I think it's going to be a pretty big, steep climb for TikTok. And I say that because it's very hard to suddenly turn a big ship like that and pivot a brand from what people expect from it, which in TikTok's case means vertical videos on your phone and short videos. That said, that's exactly the point where YouTube was at maybe 3 years ago. And the fact that they have really, really ramped up that CTV business means it could happen with TikTok. But the object lessons on the flip side of that argument are, we're still not seeing like Facebook Watch or Instagram, Reels or TV, like migrate over fully to like CTV adoption the way, I mean, there's still almost entirely a mobile-based phenomenon. So to my earlier point, it is hard to make that transition, but you could say that YouTube did it, so therefore TikTok can and might.
Brian, I saw you shaking your head. Any other thoughts on that one?
No, I totally agree with Paul. I think it's a consumer mindset change from going from a passive viewing experience like YouTube, and then you doing more of an active experience, which is TikTok, albeit it's on your phone. But the flip side was made, which was YouTube, which has made lots of inroads into CTV and started on mobile and desktop, has generated significant revenue from creating short form content that's verticalized. So, but I think it's going to be a challenge for TikTok based on consumer behavior and also audience's expectation for what the content's supposed to be.
And if I can just add to that, Brian, so interesting, you mentioned YouTube started on desktop and mobile. I mean, I think to be more specific, it started on desktop and then migrated to mobile. If you recall, like those of us who are ancient like me, we saw Facebook start on desktop and then really have a lot of challenges, first to migrate to mobile and then to build its ad business. So stranger things have happened. I think, these platforms get embedded in people's minds a certain way, and it is hard to break those connections. But if you look at the, relatively recent history of digital media and social media and streaming TV and video platforms, it has, companies have been able to do it. It just usually takes a while.
I think it all sort of anchors on the content creators, where they want to be. And that will bring their audience and following to those formats and platforms.
Yeah.
All right. Well, thank you both for that. So we have a lot of questions that have come in from the audience, really about navigating the cookieless future and all of that uncertainty that comes with it. So I think our next viewer will really benefit from both of your perspectives on this one. What's your advice to publishers that are navigating this cookie uncertainty? We are trying to meet advertisers where they are, such as Google, identity partners, et cetera, but we're seeing very little lift so far. So is this guidance to just stay the course as the lift will come? What do you think about that? Brian, do you want to take that first?
I don't think it's about staying the course. I do think it's about constantly bringing in new partners and new technologies to drive that lift. Like I said earlier, and where I see ways that the impact of third-party cookies can really change people's perceptions, it's about testing and learning. So maybe Google is not performative today, but there are other partners out there that can help solve those challenges. And maybe it's not about not just about identity. Maybe it's just about impact and incrementality, like we were talking about earlier. Like if a publisher can work with different providers and different partners from a data or identity perspective, that is absence of cookies that can help drive sales impact, maybe that is what is considered most paramount to the partners that the publishers are working with.
Yeah, I mean, I think, publishers have first-party data. It's very valuable to them. They may not have the scale of data that some of their partners have, but I think, to Brian's point, it is not so much about like whether you own the data as whether you can leverage that first-party data. So I agree with, working with partners, and I completely agree that staying the course is not really a great option because that hasn't worked out so well so far. So we're kind of like shifting into a lot of new paradigms in advertising, which is kind of like the underlying theme of all of the trends that I shared and all of the great insights that Brian shared. So in that new world, you kind of have to come up with, new ways of trying to attack the problem.
Let's continue on this wavelength of first-party data. Brian, what are the implications in a world where we only have first-party data and we don't have any third-party data?
Oh, I love that question. In a world where there's only first-party data, first of all, there's two ways of looking at this. One lens is that walled gardens become a very dominant force, and the open web ecosystem becomes a threat. That's one way of looking at it. But the other way of looking at it is that that first-party data is frankly more accurate than third-party data, and if you're a brand, being able to have first-party data becomes an asset, not only to your brand value, but you'll be able to, it's a regenerating asset that you can use over and over again. And as we stated earlier in the conversation around AI, having that accurate first-party data set with the complement of AI and language models and new generative models that go on top of that, you may be able to create the scale that walled gardens were able to basically brought to the marketplace previously on your own, because you're able to sort of fill in where the gaps are.
Great, thank you. We are going to take one more question today. So this is for you, Paul. So you've shared so many wonderful trends with us today, and you and the team here look at so many trends throughout the year. We have to assume that there were some trends that didn't make it into the report. So can you share what some of those were?
Well, I think we started with 13 and narrowed them down to 8. We cheated because we combined different trends into single ones. So we didn't leave a lot on the cutting room floor, but there is one here that I'll share, and I'll actually state it exactly as it was written. TikTok Shop will grow into the first meaningful threat to Amazon's dominant position in affiliate marketing. So that gets into affiliate, it gets into Amazon, gets a little bit into that creator economy that Brian alluded to. And it is also about commerce on social platforms, which again, I think is going to take a while, but I also think that TikTok is moving very fast. It has presented what I would say is almost an existential threat to YouTube in particular, and maybe to some extent to Google with search. And the next frontier could very well be Amazon with e-commerce and affiliate marketing.
All right. Well, thank you for sharing that with us and giving us a sneak peek into what did and did not make it into the report today. I just want to say thank you so much. That is all we have time for today. Thanks again to Paul for joining us, and a very special thanks to Brian and to the team at Attain. Of course, our Studio II crew and the eMarketer production team also deserve a huge thank you for making this webinar possible. So as promised, we'll be emailing you a link to today's slides along with a full recording of the session, so keep an eye out for that. And before we wrap up, let me just take a moment to tell you what's happening across eMarketer's media channels. You can register for more live Analyst and Tech Talk webinars on our events page at eMarketer.com/events. Tomorrow, we also have another exciting 2024-focused Analyst webinar for you. Principal Analyst Yuri Wormser will share his top tech trends for the new year, so that is not to miss. And finally, don't forget to check out our newsletters and our daily podcast called Behind the Numbers. Thank you again for joining us, and enjoy the rest of your day.